Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today marks part 11 of my Path to the Corner Office series for overseas posting examination questions and their corresponding sample answers for bankers. What is the all-in cost ceiling for trade credit per annum? Option A, benchmark rate plus 200 bps spread. Option B, benchmark rate plus 500 bps spread. Option C, benchmark rate plus 400 bps spread. Option D, benchmark rate plus 300 bps spread. The answer is option D, benchmark rate plus 300 bps spread. Which organization agreed upon the UCP 600 rules? Option A, Reserve Bank of India. Option B, International Chamber of Commerce. Option C, Export-Import Bank of India. Option D, World Trade Organization. The answer is option B, International Chamber of Commerce. What is the primary function of the Export-Import Bank of India? Option A, to issue letters of credit. Option B, to provide insurance for imports. Option C, to regulate domestic trade policies. Option D, to boost Indian businesses globally. The answer is option D, to boost Indian businesses globally. What is the primary difference between the two classes of Incoterms 2020 rules? Option A, one is for domestic trade and the other is for international trade. Option B, one is for capital goods and the other is for non-capital goods. Option C, one is for multimodal transport and the other is for sea transport. Option D, one is for exporters and the other is for importers. The answer is option C. One is for multimodal transport and the other is for sea transport. Banks are prohibited from extending loans for which type of transactions? Option A, educational loans. Option B, personal loans. Option C, capital account transactions. Option D, real estate investments. The answer is option C, capital account transactions. Under the Liberalized Remittance Scheme, LRS, loans to NRIs or PIOs must meet which condition? Option A, the loan must be repaid within 6 months. Option B, the loan must be in cash. Option C, the loan must be interest bearing. Option D, the loan must have a minimum maturity of 1 year. The answer is option D, the loan must have a minimum maturity of 1 year. What is the maximum amount a resident individual can remit under LRS per financial year? Option A, USD 2,50,000. Option B, USD 5 lakhs. Option C, USD 1 lakh. Option D, USD 50,000. The answer is option A, USD 2 lakhs 50,000. When was the Financial Action Task Force FATF established? Option A, 2000. Option B, 1989. Option C, 1995. Option D, 2010. The answer is option B, 1989. Which countries originally formed the FATF? Option A, G7 countries, European Commission, and 8 other countries. Option B, ASEAN countries. Option C, BRICS nations. Option D, OPEC nations. The answer is option A, G7 countries, European Commission, and eight other countries. India became a member of FATF in which year? Option A 2000, option B 2005, option C 2015, option D 2010. The answer is option D 2010. What does the FATF blacklist refer to? Option A countries with no financial regulations, option B countries with strong AML or CFT measures, option C jurisdictions under increased monitoring, option D high risk jurisdictions subject to a call for action. The answer is option D high risk jurisdictions subject to a call for action. What is the FATF grey list? Option A high risk jurisdictions subject to a call for action, option B countries with a strong AML or CFT measures, option C countries with no financial regulations, option D jurisdictions under increased monitoring. The answer is option D jurisdictions under increased monitoring. Under LRS, banks are prohibited from permitting capital account remittances to which countries? Option A, all European Union countries. Option B, countries under the FATF grey list. Option C, all developing countries. Option D, countries designated as high risk jurisdictions, blacklist. The answer is option D, countries designated as high risk jurisdictions, blacklist. Non-residents can invest in India under which conditions? Option A, no permission is required. Option B, general or specific permission from RBI. Option C, only through automatic approval. Option D, only through government approval. The answer is option B, general or specific permission from RBI. What is foreign direct investment? Option A, investment in mutual funds. Option B, investment by non-residents in the capital of an Indian company. Option C, investment in government bonds. Option D, investment by Indian residents in foreign companies. The answer is option B, investment by non-residents in the capital of an Indian company. Which law governs FDI in India? Option A, FEMA 1999. Option B, Banking Regulation Act 1949. Option C, Companies Act 2013. Option D, SEBI Act 1992. The answer is option A, FEMA 1999. What are the two entry routes for FDI in India? Option A, direct route and indirect route. Option B, automatic route and government route. Option C, domestic route and international route. Option D, public route and private route. The answer is option B, automatic route and government route. What is the fully accessible route FAR for NRI investments? Option A, investment in mutual funds. Option B, investment in specified government of India dated securities without ceilings. Option C, investment in Indian real estate. Option D, investment in private Indian companies. The answer is option B, investment in specified government of India dated securities without ceilings. What are sovereign green bonds used for? Option A, funding military projects. Option B, financing private companies. Option C, funding public sector projects to reduce carbon intensity. Option D, supporting foreign investments. The answer is option C, funding public sector projects to reduce carbon intensity. Which organization introduced the FIRMS online application? Option A, Ministry of Finance, option B, FATF, option C, RBI, option D, SEBI. The answer is option C, RBI. What does FIRMS stand for? Option A, Foreign Investment Reporting and Management System. Option B, Financial Information Reporting and Management System. Option C, Foreign Institutional Reporting and Monitoring System. Option D, Financial Investment Regulatory Management System. The answer is option A, Foreign Investment Reporting and Management System. What is the purpose of the Single Master Form SMF in FIRMS? Option A, to simplify foreign investment reporting. Option B, to regulate banking transactions. Option C, to track domestic investments. Option D, to monitor tax compliance. The answer is option A, to simplify foreign investment reporting. What regulates overseas investments in India? Option A, Companies Act 2013. Option B, FEMA and RBI directions. Option C, Income Tax Act 1961. Option D, SEBI guidelines. The answer is option B, FEMA and RBI directions. What is the primary goal of sovereign green bonds? Option A, to fund private sector projects. Option B, to increase foreign exchange reserves. Option C, to promote international trade. Option D, to mobilize resources for green infrastructure. The answer is option D, to mobilize resources for green infrastructure. What is the maximum duration allowed for an exchange in merchanting trade transactions? MTT. Option A, 2 months. Option B, 4 months. Option C, 6 months. Option D, 8 months. The answer is option B, 4 months. Are third-party payments allowed for export and import legs of merchanting trade transactions? Option A, yes, with prior approval from RBI. Option B, yes, for transactions exceeding $10,000. Option C, no, they are not allowed. Option D, yes, if routed through AD banks. The answer is option C, no, they are not allowed. How often must defaults in any leg of MTT be reported to the RBI? Option A, half yearly. Option B, quarterly. Option C, annually. Option D, monthly. The answer is option A, half yearly. What happens to merchanting traders whose outstanding defaults reach 5% or more of their annual export earnings? Option A, they are blacklisted permanently. Option B, they are fined by the RBI. Option C, they are liable for causing caution listing. Option D, they are banned from conducting MTT. The answer is option C, they are liable for caution listing. What is required to regularize MTT deviations from extant guidelines? Option A, approval from the Ministry of Finance. Option B, approval from the Directorate General of Foreign Trade. Option C, approval from the Export Promotion Council. Option D, approval from the Regional Office of RBI. The answer is option D, approval from the regional office of RBI. What does a high sea sale HSS transaction involve? Option A, sale of goods within India only. Option B, sale of goods before they are dispatched from the overseas port. Option C, sale of goods after they arrive at the Indian port. Option D, sale of goods while they are still in transit. The answer is option D, sale of goods while they are still in transit. What document is required for a high sea sale transaction? Option A, export declaration form. Option B, high sea sale contract or agreement. Option C, letter of credit. Option D, bill of entry. The answer is option B, high sea sale contract or agreement. What is the key difference between HSS and MTT? Option A, HSS is only for exports while MTT is for imports. Option B, MTT requires a bill of entry while HSS does not. Option C, MTT involves local invoices while HSS does not. Option D, HSS involves goods entering India while MTT does not. The answer is option D, HSS involves goods entering India while MTT does not. What are the two types of remittances? Option A, capital and current. Option B, foreign inward and foreign outward. Option C, export and import. Option D, domestic and international. The answer is option B, foreign inward and foreign outward. What is the impact of foreign inward remittances on the balance of payments? Option A, negative impact. Option B, neutral impact. Option C, positive impact. Option D, no impact. The answer is option C, positive impact. What is the impact of foreign outward remittances on the balance of payments? Option A, no impact. Option B, negative impact. Option C, positive impact. Option D, neutral impact. The answer is option B, negative impact. How are foreign exchange transactions classified? Option A, domestic and international. Option B, export and import. Option C, current account and capital account. Option D, inward and outward. The answer is option C, current account and capital account. What is a capital account transaction as per FEMA 1999? Option A, a transaction limited to domestic trade. Option B, a transaction that does not affect the liabilities. Option C, a transaction that alters assets or liabilities outside India. Option D, a transaction that involves only current account payments. The answer is option C, a transaction that alters assets or liabilities outside India. What facility is provided to customers by AD banks offering internet banking? Option A, automatic approval for foreign transactions. Option B, unlimited foreign exchange transactions. Option C, online submission of Form A2. Option D, direct remittance without documentation. The answer is option C, online submission of Form A2. What is the limit for carrying Indian currency notes to Nepal or Bhutan? Option A, rupees 10,000. Option B, rupees 50,000. Option C, rupees 25,000. Option D, rupees 1 lakh. The answer is option C, rupees 25,000. What is the retention limit for unused foreign exchange in currency notes? Option A USD 2000, Option B USD 5000, Option C USD 1000, Option D USD 10,000. The answer is option A USD 2000. What is the overall limit under the liberalized remittance scheme LRS per financial year? Option A USD 2 lakhs, Option B USD 1 lakh, Option C USD 2 lakhs 50,000, Option D USD 5 lakhs. The answer is option C USD 2 lakhs 50,000. Is a PAN card mandatory for remittances under LRS for capital account transactions? Option A, yes, it is mandatory. Option B, no, it is not required. Option C, only for transactions below USD 25,000. Option D, only for transactions above USD 50,000. The answer is option A, yes, it is mandatory. For current account transactions, up to what amount is a PAN card not required? Option A USD 15,000, Option B USD 10,000, Option C USD 50,000, Option D USD 25,000. The answer is option D USD 25,000. Can banks extend loans to facilitate remittances for capital account transactions under LRS? Option A, yes, if collateral is provided. Option B, yes, for amounts below USD 1 lakh. Option C, yes, with RBI approval. Option D, no, they cannot. The answer is option D, no, they cannot. What determines the validity of an import authorization? Option A, date of issuance of the authorization. Option B, date of shipment or dispatch from the supplying country. Option C, date of arrival of goods at an Indian port. Option D, date of payment of customs duty. The answer is option B, date of shipment and dispatch from the supplying country. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.